Hello, this is Property Investor News. I'm Kelly Lemon and we're here at Excel. I'm here with Steve Larkin from LendInvest. Steve, thank you very much for joining us. We appreciate it. Steve, tell us a bit about LendInvest and what you guys do.
So LendInvest was started in about 2008 under the name Montello, and it started up as a short-term bridging finance company. We rebranded in 2013 under the LendInvest brand, and now we provide short-term bridging finance and also development finance.
Great. So can you tell us, in terms of your business model, what you're seeing at the moment? We've just had the stamp duty changes. We've had quite a lot of change in the market. How are you seeing that play out?
Yeah, I think the number of transactions for a buy-to-let has dropped a little bit, certainly in April. But from a development finance point of view, we think there's still a good market there. We think that people are looking to build their own houses. We have new developers coming on stream, and everyone really wants to start building because of the stamp duty change, which affects them as well. So obviously people are now looking to convert their houses as well. So we're seeing both people who want to convert their own properties and also people who want to build the new ones.
So what's your sort of prime customer that you have attract to your business model?
So from a development finance perspective, what we're looking for is existing borrowers who've done a scheme before, normally up to maybe 5 units themselves. We can lend anywhere from £250,000 up to maybe £10 million. It's in and around London, but we're UK-wide, so we've got schemes in Birmingham, Nottingham, Chester, Plymouth, Anglia. So we're all wide, but as long as the market is liquid and we know that the stock can shift, then we're happy to lend.
And what sort of trends are you seeing in the market at the moment?
I think what we're seeing more of is people who need to shift their products, so they want to get it moving quite quickly, and that helps our model as well because our terms are normally 2 years. So it's getting there, building the stock, getting out and selling it.
So is that your prime focus then, really, development?
No, bridging finance has been our bread and butter, but we launched our development finance products in November, December last year, and now we're trying to get out in the market and tell everyone that we now offer development finance as well as a bridging finance product.
And what made you into development finance?
Well, I think we saw that there was an angle because people who use bridging finance will only buy bridging from an auction, or they'll buy it from a piece of land they want to buy, and then they want to move into the development finance space. And what we were seeing was that people who were getting the bridging finance from us, but then going somewhere else for development finance. And we felt there was an opportunity to add that other string to our bow and offer the bridging finance, and then you can bridge to development.
And you talk obviously about bridging finance. How have you seen the market in terms of auctions? And because presumably a lot of your consumers will be using the bridging finance to fund auction flips. How are you finding that market at the moment?
Yeah, it's still very strong. I think people are still very keen to buy at auction, and I think the people like LendInvest can offer very speedy and very quick finance, and it's a place where the high street lenders don't want to be. So they come to us because they know that we can get back to them very quickly, and if we provide terms to them, we will stand by those terms.
In the next few months, we're going to be seeing more mortgage regulation in the market. Do you think that's going to impact your model?
I think bridging, yes. I think development, less so. I think there's always going to be a market for development, and I think the small-scale developers, as I spoke about earlier, there is a very niche market for that, and that's really why we want to attract the people to come in who want to build their products and want to start on that ladder of building their own developments.
And what challenges do you see, particularly in the development markets, over the next sort of 12 to 18 months?
I think planning is always very key. I think that planning generally are more used to the larger schemes because of the number of stock you need to get in the market, and I think it's much easier to get probably a planning permission for 200 units than it would be for 15, and therefore our developers or people we want to attract, I find it very difficult to get their planning through. I think that's one. I think land availability is always very key because stock is so crucial that people can buy in, they'll buy it with their own cash, or they'll move very quickly, and therefore it keeps the small developer out because they're buying it very quickly, and also they're buying it for unrealistic prices. So the price is being pushed up just because people want to deploy their money, and therefore it just means that the small developer is struggling to really find that piece of stock.
And what sort of customer base do you tend to work with? Do you tend to work with smaller developers or larger ones?
We tend to work with a small to medium size, so it would be a developer who's building probably 10 houses or 10 to 15 flats, and can do it over probably 12 to 24 months because that's how quickly we want to churn our book. So someone who can build, very quickly sell, and then move on to the next development, and then we'll return back to LendInvest and want to borrow some more money.
And what sort of challenges do you see potentially in the bridging market over the next sort of 12 to 18 months?
I think the stamp duty has really taken the wind out of everyone's sails to an extent, and I think there was a really big push towards the end of March for everyone to sort of buy those properties. I think when that settles down, I think the market will come back very quickly. But again, it's about finding the stock, and it's about moving it, and it's about being competitive in the market. And there are so many companies that are now coming into that bridging space. It's about being competitive with your products and with your customers and with your staff to show that we can offer the best products in the market. So it's really the competitive nature of it, I think.
And in terms of auctions, do you expect to see a drop in the amount of transactions over the next sort of 12 to 18 months as a result of some of the tax changes we've seen?
I think initially, yes. I think there will be, so certainly this quarter, maybe next quarter, it will tail off a little bit, but I think it'll eventually come back, and whilst it's been a really big issue for now, I think people will generally get used to the fact that from a buy-to-let basis, there's now a slightly higher charge to pay. So I think initially, always it takes a wind out of people's sails. It always is a really big issue and people don't want to do it. But eventually, people will still want to buy property. They still want to be that investor. They still want to know you can get returns from a buy-to-let product, and therefore I think it gradually will come back.
And what's your views on the actual buy-to-let market as a whole at the moment? Because obviously, again, we've seen some changes. Do you think that's sort of shifting investors into a different direction, or do you think it's, as you say, something that we'll just kind of get used to?
I think they'll get used to it, but obviously the PRS side of it has an angle because people are buying much greater value of stock. They're buying a lot more units, and therefore they're putting them into more PRS sides. So I think they're trying, the government, by virtue of what they're doing, is trying to push away from the smaller investor. But people still want to be investing in property. They can get a good return on it that you can't get from banks or you can't get from funds, and therefore it's always a good return. If you buy well, you know your stock, you know your price, and you can work with the right lender.